Many signs point to a thriving U.S. economy, so experts have been predicting interest rate cuts. Recent inflation numbers, though, have many pushing back predictions of when exactly that might happen.
And now a handful of prominent voices are saying rate hikes might be in the future. Amy Kiley looks at why and how the uncertainty affects you.
We ought to go all the way.
A small but growing number of Fed officials and economists say it's possible interest rate hikes could be coming. Fed Governor Michelle Bowman says an increase could be necessary if inflation progress reverses. And the Minneapolis Fed president says a hike is not off the table.
If we stop short, then you all are going to say, well, maybe they're going to stop short next time.
Those are minority Fed views, but the new Consumer Price Index report shows inflation accelerating. That has former Treasury Secretary Larry Summers floating the idea of a rate increase. A wholesale inflation gauge out yesterday is better than expected, but it shows the highest 12-month increase in almost a year.
The one thorn in our side, obviously, is inflation, which has been very hard to vanquish.
The uncertainty is affecting the stock market.
There's so much dissent within the Federal Reserve and their governors coming out at different times. The fact that they don't speak in one voice, and I know they're not supposed to, but it can be so confusing to the marketplace.
It's also creating doubt that loan rates will improve soon,
which many people were expecting, whether to buy a car or to purchase a home in the next few months.
And stubborn inflation itself affects how Americans feel.
Even though Americans' wages overall have lately been outpacing inflation, that still doesn't mean that Americans feel great about their finances.
I'm Amy Kiley reporting.